Welcome to Business Studies Grade 8 and 9. The topic for today is recording business transactions in the ledger accounts. I'm your presenter, Mr. Simuntala John. Let us quickly look at the lesson outcomes for today. 1. We shall look at the rules for double entry bookkeeping. Secondly, we'll look at recording business transactions in the ledger accounts. And the last part, we'll look at balancing the ledger accounts. So in the first part of this lesson, we'll look at the first two. Then in the last part of this lesson, we'll look at the last two again. Let's quickly look at rules for double entry system or rules for double entry bookkeeping. Every business transaction has a double effect on the equation and the business. So for this reason, we use the double entry principle to record transactions. Now, the double entry system principle, this one has rules. So let's look at the rules that will govern us, or that is going to help us on how we can record transactions in our books. 1. To every transaction, we should make a debit entry. So when can we make a debit entry? A debit entry will be made when the following happens. 1. When there is an increase in the value of an asset. For instance, you buy an asset. 2. When there is a decrease in the amount of liability. For instance, when you pay off a certain liability. 3. When there is an increase in the amount of an expense. So, in this case, when an expense receives some money. 4. A decrease in the amount of income. We know that incomes are put on the credit side, so when there is a decrease in an income, we should make a debit entry. The other side of the effect is a credit entry. So we can all make a credit entry when the following happens. So it's actually the opposite of a debit entry. So 1, when we have a decrease in the value of an asset. For instance, you sell off an asset. 2, when there is an increase in the amount of liability. 3, when we have a decrease in the amount of an expense. Lastly, when we have an increase in the amount of an income. For instance, you receive discounts, you receive commissions. As long as it's an income coming, you should make a credit entry. Now, having looked at the rules, let's quickly look at the steps that we can follow when posting or recording transactions to the ledger. The following 4 steps are the steps we can use quickly to record transactions in the ledger accounts. Whenever you're given any transaction, please quickly, you should identify the 2 accounts that are required for each transaction. Secondly, you should identify from the 2 the account which will be debited and the account that is going to be credited. After that, you should make a summary of the accounts needed. So from all the transactions you have, group them and make a summary. I'll show you how that one is going to be done. Then lastly, you should record the transactions in the ledger accounts. Now, having looked at these steps, let's quickly move on and look at an example. Here is an example. So, how do we handle this particular example? So, we'll answer it using step 1. We'll follow strict those 4 steps. So, we shall combine first step 1 and step 2. We'll first identify the 2 accounts involved in each transaction. Then we shall identify the account to be debited and the account to be credited from the 2 accounts already identified. So, when you look at the transaction we have here, if we quickly scrutinize each one of these, you discover that we are going to have something that is going to look like this. 1. Let's look at January 1. Started business with 100,000 at bank. So started business, the account here is capital and the account here is the bank. So since the double entry principle states that we should debit the account receiving and credit the account giving, so in this case, bank is going to be debited while capital is going to be credited. Transaction number 4, withdrew 40,000 cash from the bank for business use. Remember, this is business use. It's not drawings, unless if it was private. So in this case, we have cash account and bank account. So cash has been gotten from the bank, meaning the bank has given it cash. So the double entry will be debit cash account, credit bank account. Transaction 8, paid rent by check 1,000. In this case, we have rent account and bank account. Whenever you see check, it means it's bank account. So the double entry system here will be, we shall debit rent since it is receiving, and we shall credit bank since it is giving out. Transaction 11th, bought office equipment by check. The accounts involved here, there is office equipment and bank. So the double entry system will be that we shall debit office equipment and credit bank account, since bank is giving to office equipment. On 12, bought goods by cash 3,000. So when you hear the word bought goods, it means these are purchases. So we have purchase account and cash account. So the double entry system here will be that purchases is going to be debited while cash is going to be credited because we are paying for purchases. Sold goods by check 4,000. Here, when you hear sold goods, it means it sells here. Then check, it's bank. So the two accounts there we have sales and bank. So the double entry system will be that bank is going to be debited while sales is going to be credited, because whenever you sell, you receive the money. The last transaction is 7,000 worth of goods were bought on credit from Musonda. So the two accounts involved here is purchases, because goods were bought, and Musonda, a credit I mean. So the two accounts involved there, we have purchases account and Musonda's account. So purchases is going to be debited while Musonda's account is going to be credited. Now let's quickly look at step number 3. Make summary of the accounts needed. So the summary of the accounts needed to record the above these transactions here are, you pick one, just once, all these items, pick it once, even if it's appearing 100 times. So in this case, we'll pick bank, cash, capital, rent, office equipment, purchases, sales, and Musonda. So a summary will be like that. We are going to have capital account, bank account, cash account, rent account, office equipment, purchase account, and sales account, as well as Musonda's account. So what you are seeing there, these are individual accounts that we are going to open, and these will be grouped in various ledger accounts. So for now, we end here. Please look out for part 2 of this same lesson. I love you. Bye-bye.